big positive change coming to the iFund and the TSP sometime in 2024. No change required on your part, no action required by you. You're not going to lose access to your money or anything like that, but you're going to get increased exposure to more of the international emerging markets, specifically the countries that were kind of lacking in the old fund. And so it's overall a very positive change in our opinion.
Welcome to the Military Money Manual podcast, where every episode is all about achieving financial independence in the military faster than before. We believe personal finance shouldn't be boring or intimidating. Building wealth can be simple, and financial freedom is the ultimate financial goal. Now, here's your hosts, Spencer and Jamie.
Welcome back to the Military Money Manual podcast. This is Jamie here with Spencer Reese from militarymoneymanual.com. Today, we're going to be going over an exciting change to the iFund, the international fund inside of your TSP. I alluded to it a little bit in the intro, Spencer, but this is good news. What are we looking at in 2024 coming our way?
Okay, this is kind of nerdy, but I am super stoked about the changes coming to the TSP because I'm a big believer in the thrift savings plan, and I think it's a great retirement investment option for military service members. Big proponent of it. Talked about in my book, The Military Money Manual, Practical Guide to Financial Freedom. We've even got a course, Jamie, militarymoneymanual.com/TSP. I would be remiss if I didn't point people towards that. And we'll probably add this episode into that course. And that's something that we've been doing for a while now, is continue to add free content. But yeah, let's talk about it. So the iFund is part of the thrift savings plan, and it currently is the international stock investment option inside the iFund. So we've got a couple episodes out there. There's 5 TSP funds: C, S, I, G, and F. So the G is your government bonds. Your F is your fixed income. That's your corporate bonds. C is your S&P 500. So if you ever hear the S&P 500, it's the 500 largest companies in America. That's in the C fund. The C stands for common stock. And finally, we've got the S fund, which is the small cap or the completion index for US stocks. And with the C and the S fund, you are always able to combine the two in like an 80% C fund, 20% S fund, and basically create a total US stock market index fund inside the TSP. So you can use VTSAX, or the Vanguard Total Stock Market Index Fund, as kind of a proxy for the C plus the S fund. The ETF, the exchange traded fund that trades under, is called VTI. And so you could kind of think of the iFund, it was supposed to be the XUS, the Vanguard Total International Stock Market Index Fund. The mutual fund version of that is VTIAX, but it wasn't. It was kind of a dud. And it was tracking an index called the MSCI, that's Morgan Stanley Capital Investment EAFE Index, which is Europe, Asia,
Australasia and Far East.
Yeah. So, kind of a strange index. If this was
almost like a little bit of a niche.
Yeah. Exactly. It's more of like a sector, like ETF, than it's supposed to be this like all-encompassing, international stock exposure for, I think there's 7 million TSP participants now, and it's probably well over $1 trillion of assets in there. So I'm really glad that they're making this change, and I'll skip right to the punchline now, so we don't hold people in suspense, but they're switching the iFund to the Morgan Stanley ACWI, IMI, XUS, X-China, X-Hong Kong Index. Okay, what does that word salad mean, Jamie? Let's break it down. So MSCI, that's Morgan Stanley Capital Investment. So basically, Morgan Stanley puts out a list of, they say, these are essentially all the companies in the world that we can trade and track publicly. They trade on public stock market indexes. And the ACWI part of it, that's All Country World Index. And then the IMI is Investor World Market Index. So essentially what it's saying is the iFund is going to be invested in 5,000 large, medium, and small cap companies around the world in 21 developed countries and 23 emerging market countries. And that's a big change from the old iFund.
So when we look at the old iFund that had 21 developed countries, but no emerging market countries, now we have 23 of them, but there's still a couple large players that are excluded from this fund. Can you explain what's not quite included in the new iFund that's coming in 2024?
Yeah, so as it says in the title, this is the All Country World Index, excluding the US, which makes sense because this is supposed to be the international fund available inside the TSP. It's not supposed to have any US stocks in it. So that makes total sense. You also excludes China and it excludes Hong Kong for basically political reasons, which I can completely understand, but that's what Congress has mandated. And this is the best option that the TSP board of directors has come up with, and it's been approved. In fact, they voted on this change back in 2017. This is not a new thing. This has been a long time coming. And with over 5,500 stock represented inside the fund, it's going to cover 99% of the global equities outside of the US, China, and Hong Kong. So this is an excellent broad market index. And we're talking about stocks in countries like Australia, Canada. Oh yeah, that was one thing that the previous iFund, I think, excluded. I don't think they had Canadian stocks in there. Canada's a huge market. Germany, Israel, Ireland, Japan, even tiny old New Zealand, Singapore's in there. And some, to me, kind of funny, like Egypt. Don't hear a lot about the Egyptian stock market that often, but it's in there. And we get to invest in all those great Egyptian companies building pyramids and the like. Turkey, United Arab Emirates, Saudi Arabia, so a lot of Middle East coverage there. And those fall under the emerging market countries. So yeah, like Jamie said, 21 developed countries, 23 emerging market countries. And it's representing, whereas the old index was representing 55% of the non-US market cap, the new index is representing 90% of non-US market cap. So this is a much, much better option if you want broad market index, simple, low cost, automatic, diversified access inside your thrift savings plan. The new iFund, I'm a big fan of it.
So in past episodes when we talked about the TSP or in the course, the Confident TSP investing course you mentioned earlier, you sometimes were talking about how the iFund wasn't that great, so you'd prefer to hold international exposure and equities in your Vanguard fund. Does this new change to the TSP, does this change your stance on a statement like that in the past?
Yeah, absolutely. I would have almost no qualms recommending the new iFund to someone who wants to have some international exposure inside their retirement asset allocation. I think that whereas previously I kind of had a hedge and be like, I really can't recommend the iFund because you're missing a lot of like really key countries and there's no emerging market exposure. So, imagine like the next, I don't know, Alibaba or Nestle or, some big car company, right? And you just completely miss, all of the potential gains on it because you weren't in an index that owned that stock. So I think that this is a great change. I'm really glad that the TSP board voted on this. And I think they're fulfilling their fiduciary duty to the TSP members by enacting this. There is an asterisk. It doesn't have, like we've been talking about, China is excluded and Hong Kong is excluded. Now, at the time of this recording, Chinese stock market not doing so hot this year, but it is probably, if not going to be the largest global economy one day. It still has, a remarkably large impact on the global economy. So I will not be moving any of my money into the iFund inside the TSP at the time of this recording. My TSP allocation is 80% C fund and 20% S fund. And I hold all of my international stock exposure at Vanguard using the VXUS ETF or the VTIAX Admiral Fund.
So change is sometimes scary. Is there a concern with this? Is this riskier that we're now exposed to more emerging markets, or is there anything to be worried about as far as risk goes with this change?
I mean, risk is in financial investing is usually defined as volatility. There might be a little bit of additional volatility, but usually if you have that increased volatility, you also have increased gains. And if a lot of people have been disappointed in the performance of the iFund over the last couple of years, I tend to not look very much at the performance numbers. I try to think of what kind of asset are you buying when you buy a TSP fund. And for the iFund, it was hard to recommend it as to someone who wanted international stock exposure. Like the old TSP iFund had no emerging markets, like we talked about, and only covered 55% of non-US market capitalization. The new fund is covering 90% of non-US market capitalization. And honestly, at that point, it's fine. And this is especially good too, because, Jamie, we like to steer people towards the life cycle funds. And we'd like to talk, like currently, I think right now, L2065 is the furthest out life cycle fund. I have no problems recommending to a young soldier, a young Marine, a young airman, hey, what should I be doing with my TSP? Luckily for you in the BRS, when you join, you're automatically placed into the life cycle fund that's furthest out. And that's perfect. Like just stay in the L2065 and some of that money is going to be invested in the iFund. And that's great. Now you're going to have exposure to 90% of non-US market capitalization. The TSP board says, based on their analysis, that they expect the new index to offer opportunities for higher returns without a significant increase in risk. I think that's probably true. I wouldn't be surprised though, like Murphy's Law, they bring this into place and like all the emerging markets or developed markets outside the US like crash and they're like, oh my God, we should have never changed the iFund. And it's like, come on, man, there's no way that you can predict this. So if you already have money invested in the iFund, you won't have to change your investment. It'll automatically happen. And because of market timing, they can't announce when this is going to happen until probably after the markets close because they don't want people to try to like get in and time it. I'm sure somebody out there will catch some kind of leak and try to trade on it. It's one of those...
Try to manipulate the price.
Yeah, exactly.
Pull a GameStop kind of thing.
Yeah, exactly.
But it will happen this calendar year. By the end of December 31st, 2024 will be the absolute latest and they'll announce after it happens.
Yep, that's right. I wouldn't be surprised if this is kind of like a summer thing, maybe August when the market's a little bit quieter. And then just like on a Friday afternoon, they're like, hey, over the weekend, we're going to switch it over. And on Monday, you're going to have a new iFund. Congratulations. So I think this is a good thing for TSP investors. I haven't seen a lot of negative press about this. And I think that's pretty good. I think it's an easy sell now, Jamie, to tell people like, hey, if you want some international stock exposure, like there's a great fund inside the TSP and it's called the iFund. And you get access to over 5,000 publicly traded companies around the world in over 44 countries. So I think that's fantastic. That's a really good thing. And I'm really excited that the TSP hasn't been completely stuck in the mud and can make a positive change like this, even if it takes, is it been 7 years? I think they were going to make the switch earlier, but COVID and everything. But yeah, 2017, they voted on this.
But there's nothing we need to do. It's going to be transparent to us. We don't lose access to our funds. We don't have to get a new TSP.gov login. None of that kind of shenanigans we witnessed recently when they switched systems.
Oh, yeah. Don't tell me. TSP login is just, the interface is just atrocious. I'm sure they paid millions of dollars for it, and it's just awful.
What about someone who's not sure if they want or need international exposure? You kind of hinted at it a little bit. And in past episodes, you used the term, I think, home field bias or home country bias. What if someone is thinking, I don't think I want international funds. I'm happy with the U.S. stock market returns, and it's been higher than the iFund.
If you look, especially recency bias, I mean, there's a great chart out there that kind of shows like when the U.S. stock market outperforms and when global stocks outperform. I mean, I remember back, I think it was 2010s when BRICS, BRICS, Brazil, Russia, India, China, what was the S? Singapore, maybe? But they were the hottest. Like everybody was like, oh, like they were way outperforming the US stock market. Well, is anybody talking about BRICS today? No, absolutely not. Like everything's NVIDIA, Tesla, Amazon, Microsoft, it's all AI. I mean, this is what happens it's really hard to predict the future, surprisingly enough. And we just don't know where the next Apple, where the next Amazon is going to come from, or even just, Toyota Motor Company. I mean, they've been around for a long time and they make a lot of money and they give that money back to their shareholders. So it's hard to predict and know what the future holds, but you can be certain if you buy a total US stock market fund and a total global stock market fund, like the iFund is becoming, that you will probably own a lot of the winners, most of the winners, a lot of the losers, probably all the losers. But on the aggregate, over the average, the winners outperform the losers and you make money. Because what's kind of funny is like the most the stock can fall is 100%, but the most the stock can gain. I mean, look at, I think it was Monster Energy, the beverage company. They were the best performing stock, I think, of the last 20 years or so. And their stock performed like 100 and let me get the exact number because it's absurd. Okay, I can't find a more recent data than this, but from November 2001 to November 2021, a 20-year period, Amazon returned 40,000%. Apple returned 45,000%. And then Monster Energy returned 111,000%. Like, that is like 1,000x return just for holding that stock.
GWAT babies, man. You can't handle it without energy drinks.
I mean, I guess we have the military to thank for a lot of that. I can't picture a deployment without a lot of Monster Energy floating around.
Okay, Spencer, last question I have is, I just pulled up the L 2065 life cycle fund that you mentioned. A lot of our listeners are going to be automatically enrolled in that under the blended retirement system. In general, it's pretty good, but it kind of caught me off guard. I had forgotten that the iFund is almost 35% of that as of spring of 2024. It's probably a little bit higher on the iFund than I would personally choose. Any thoughts on that as a 34.65% of the portfolio right now?
Yeah. So most, and this is the eternal debate, and I think we kind of alluded to it earlier about, people will say, well, why don't I just invest in U.S. stocks? Like, and why don't I just invest in the S&P 500? I mean, look at the return of the S&P 500 over the last 100 years versus, if you invested in German stocks, well, 1945 called and they're going to tell you that they're all worthless and they're going to completely reset the currency. And several times, I mean, the Deutschmark gets reset and eventually they move on to the euro. And so there's a lot of home country bias in the US because we've had 100 years, even longer, of solid data, of solid returns. We've had a functioning stock market most of the time. And it's been the greatest wealth generating machine for the average person in all of human history. But most experts, it's like if you go look at like Vanguard research, most like certified financial professionals or planners and the people who built the lifecycle funds, right? The asset managers, they will tend, especially early in someone's life when they can take more risk, they will tend to allocate a lot of their assets towards the international stocks. There has been in previous times a lot of opportunity there for some great returns that outperformed the US in many periods. And if you look, it swings back and forth. Sometimes the US is outperforming for decades, but then sometimes the international stocks are outperforming for decades. And as soon as someone, like right now, in fact, we're kind of in one of those periods of time when people have been investing for a long time. I mean, probably a decade and a half, or maybe almost 2 decades. And they think, why would I invest outside the US? Like the US is the best stock market. It has the best returns. It has the best performance. But that's exactly when it flips. And all of a sudden, the international stocks start doing way better than US stocks. And yeah, we mentioned home country bias previously, but you can do some research on that. But that's basically that, Australian investors tend to have, I can't remember the exact numbers, but let's say 60% of their assets invested in Australian stocks, even though Australian stocks only make up 2% of the global market. It's the same thing in New Zealand. It's the same thing you find in England. It's the same thing you find in the US, where people will have 100% of their equities portfolio invested in the US stock market. And yes, the US does make up a large proportion of the total global market capitalization, but it's not 100%. It's about 50%. So definitely, if you're going to market cap weight your investments, which is kind of what you're doing when you're buying a C fund, when you're buying an S fund, is you're buying more shares of the largest companies. So when you buy the C fund today, the S&P 500, you're buying a lot of NVIDIA. You're buying a lot of Apple. Well, that wasn't true 10 years ago. 10 years ago, you were buying a lot of Apple, but you're probably also buying a lot of ExxonMobil. And that's what happens in a market cap weighted investment strategy. So if you're going to follow that investment strategy, a market cap weighted investment strategy, which is kind of my philosophy, I would recommend that you do add some international exposure, because the world has basically said, like, look, we're not putting all our eggs in one basket. We're not 100% of this global stocks aren't in the US. Only 50% are. And the rest of the world has a lot of companies that make a lot of great products and serve a lot of great people and make a lot of great money. And to say that you don't want to be a part of that, that's fine. That's a completely reasonable choice, but it's not the choice that I made.
Awesome. So big positive change coming to the iFund and the TSP sometime in 2024. No change required on your part, no action required by you. You're not going to lose access to your money or anything like that, but you're going to get increased exposure to more of the international emerging markets, specifically the countries that were kind of lacking in the old fund. And so it's overall very positive change, in our opinion, coming to the iFund soon. We hope that this was exciting for you to learn about and to understand a little bit more about the international fund and what it might mean for your portfolio. Again, if you have any questions, you can hit us up anytime at podcast@militarymoneymanual.com or on Instagram @militarymoneymanual.
And like we talked about earlier in the episode, Jamie and I have got a course that we put a little bit of work into, Military Money Manual. It was actually a lot. We had to fly and be together for like 3 days, which was great, but it was a lot of work. militarymoneymanual.com/TSP. We've got some videos on there where we basically walk you through how we invest our TSP, explain the different features of the TSP. Basically, like we just want to download all the information that we've gained over, oh gosh, Jamie, 14 years, probably 15 for you now, of investing in the TSP. And like, we made some mistakes and we want to kind of share those and make sure that you don't make those same mistakes and that you get the confidence to invest in your TSP. And you don't have to go to a scummy financial advisor that's going to sell you a whole life insurance policy and tell you to get out of the TSP. That we don't want that.
And like Spencer said, we're constantly adding additional features and bonus courses to that. In fact, today I just recorded one where I went into mytsp.gov and I changed the percentages between my CS and I funds. And so I recorded it for you guys so you could see exactly what buttons to click. So if you're in the G fund or you're not in the I fund and you want to be, or you want less of it or more of it or whatever, one of the modules now, by the time this recording is out, will show you exactly which buttons to click to change your percentages. And our favorite part of that is that for every course we sell, one is donated for free to an E4 or below. So if you're E4 or below, you can reach out to us at tsp@militarymoneymanual.com and we'll get you a promo code for a free course, thanks to all those that have purchased it ahead of you.
Thanks so much for tuning in to this episode of the Military Money Manual podcast. If you're enjoying the show, please feel free to rate, subscribe, and leave a review wherever you listen to your podcasts. This helps others find the show, and we really appreciate it. Thanks again for tuning in, and we'll catch you in the next episode.
The views and opinions presented here are those of the speakers and do not necessarily represent the views of the DoD or its components. Reference to any commercial products or services does not constitute DoD endorsement of those products or services.